Thanks for tuning in to this week's edition of Market Insights. This is Steve Fernandez with Smart Profits Daily. In today's episode, I'm going to talk to you about the future of transportation, and in particular, self-driving vehicles. Self-driving vehicles will define the next generation of mobility. They're going to have the most positive impact on consumers, so I'm going to focus on self-driving vehicles as they pertain to the consumer in today's video. We're at a tipping point in multiple areas of the world, especially China and the United States, where self-driving cars are really becoming a reality. And this is setting up an opportunity for investors to make big gains if they invest in the right areas of this market. Major companies in China and the United States have already gotten the green light to launch their operations commercially. For example, AutoX, which is a Chinese company backed by Alibaba, they're able to launch the robotaxi to consumers in China. Waymo got the green light in Phoenix, Arizona to launch their platform. And there's a few companies like GM Cruise and Baidu which received a permit to remove their human safety drivers, so they no longer need humans in their robotaxis. And you can see in this robotaxi chart that the fleet size is expected to climb dramatically over the coming decades, but it's really expected to creep higher after 2030 and go parabolic after 2035. Fueling this is going to be a few things: the cultural shift and the technological aspect. Now, cultural shift might actually be the most important. When you think about it, any major technology has to be accepted by its users. So social media, for example, consumers had to buy in. And I think that that's really what's going to drive self-driving vehicles after 2030. First being, it doesn't really make sense in some cases to own a vehicle. Sometimes it can turn out to be more of a liability than an asset. And that's becoming even more true with consumers now working from home in a lot of areas, and that trend likely continuing. It sounds like it's a very sticky trend. So if people are working from home and driving less, well, sometimes it might make sense to no longer own a vehicle. You might as well take a ride share. And with self-driving vehicles, which are expected to be cheaper, that's even more true. Quality of life will increase for people that use self-driving vehicles. It's estimated that 8 hours a day Americans are spending, 8 hours a week Americans are spending in vehicles. Now, if you give that back to people, think about the productivity gain for the United States and the individual consumer. There's like 230 million Americans that are driving. So they can either use that time for productivity or leisure, but all in all, higher quality of life and a booming economy. Now, cars are, like I said, becoming more of a liability and less of an asset. But when you think about cars in the future, the purchasing decision won't actually be, do I buy a car? It will be, do I buy a car and use it as a robotaxi when I'm not using it? Or do I just participate in the riding aspect of it? So it's kind of like buying a property to use for an Airbnb service. And cost per mile, hands down, is going to go to the robotaxi in terms of cheapest cost per mile. You can see in this chart, the average US taxi, $3.50. It goes down the line in this chart, Uber, the personal car, and then the robotaxi is hands down cheaper than the others. I actually think that the personal car may be understated in this chart because this doesn't necessarily factor in that work from home piece at the moment. What is this going to mean for investors? As I mentioned, there's profit potential in this space. There's three ways you can profit from this. The first being clean energy adoption. So if you buy into companies that are either producing clean energy vehicles or they're producing parts for clean energy vehicles or even assembling clean energy vehicles, you have an opportunity to buy into this. And that's because in order for self-driving vehicles to really take hold, there needs to be growth in clean energy vehicles first. It's a lot easier to implement that technology on a fully, especially electric vehicles, on a fully electric drivetrain. You can see in this chart that we're already seeing clean energy vehicles, in particular electric vehicles, take seat, and that's expected to rise dramatically. And as you can see, if you look at it in relation to the robotaxi chart I showed you earlier, they really start to go parabolic around the same time. Also with self-driving, there has to be that hardware and software piece for that technology. So you have hardware like LiDAR sensors, and then you have software where you have the self-driving platforms. So companies that offer exposure to those elements of self-driving are opportunities to invest as well. And lastly, and maybe the most interesting, is the ride-sharing platforms that have the potential to really be leaders in this space. They already have the established networks, and as I mentioned earlier, you really have to have people buy in. So, for example, companies like Uber and Lyft, they already have a network of people. If they can find a way to implement self-driving in that ride-sharing model, they can really do well. And Uber, for example, they just sold their self-driving unit, and they're looking to monetize on it probably from a commission standpoint in the future. And they have ownership in the company. So it's an interesting time to be investing in this space. And that's going to do it for today's edition of Market Insights. Again, thanks for joining us. If you like the content, go ahead and hit the like button and subscribe button and click the bell icon. That way you can get our next Market Insights and every Market Insights video. But until then, I'll talk to you next time.